All right, we'll get started. Welcome, everyone, and thanks for joining us at Prosperwell Financial's Social Security webinar. As a reminder, so I am Haley Pasalker. I am Prosperwell's office concierge. You might have seen my name, but not seen my face. So face to the name. Nice to meet you all virtually. A couple housekeeping things before we get started. Because this is a webinar format, you are all just automatically muted. If you do have something you would like to say or add, there is a raise your hand feature. Just know that we are taking a formal question Q&A at the end of the presentation. So if you can, it would be best to just enter in your questions down below in the Q&A section, and we will get to those and address them at the end of the presentation. But you're always welcome to use the raise your hand feature. Other than that, we will get started.
Thanks, Haley. And we'll be watching the questions too. If it's something relevant or I need to reemphasize something that I was too wordy on, we sure will.
All right, well, we'll get going here. So my name's Connor Jones. I'm a senior relationship manager here. I've been here for 6.5 years. And Justin, if you want to take it.
Yeah, Justin Gaynard, senior wealth advisor. I've been with Prosperwell now for 9 years in September. So if you don't know who we are, for those of you on here, Prosperwell, we do financial planning. Everything we do is based on planning. So it's not just investing. Social Security obviously is a big factor when someone's getting close to retirement. Haley, you can go to the next slide. Sorry. So it's not just financial planning. Financial planning is all encompassing. Investing, tax strategy, estate planning, all of it bakes in together. So Social Security is a big part of that as we get closer to retirement.
Yeah, if you want to go to the next slide, please. So Social Security retirement benefits. So how do you qualify for retirement benefits? When you work, you pay into Social Security. You can earn a tax credit per quarter, so for a year, and you need 40 credits to be eligible for retirement benefits. So 10 years of working, you are qualified to receive Social Security benefits. Your benefit is based on your 35 years of earned income. So it's a formula that they use. Your last years of income can be the most important because they knock off some of your earlier years of your career where you weren't making as much. You are eligible to take your benefit at 62. You're required to take it at 70. So if you take your benefit immediately at 62, you will receive roughly 70% of it. Deferring towards your full retirement age, which Justin will get into in just a second, your benefit will go up about 6% a year. Once you receive full retirement age, if you defer beyond that, it'll grow about 8% per year until 70. If you want to go to the next slide, Haley.
And hopefully everybody can see this. I know it's small lettering. For a lot of people now, 1960 or later, I should say, full retirement age is considered 67. If you're born before then, you can see the prorated full retirement age on there. So if we say full retirement age or 67, we're referring to the same thing. You can go
next. And so there's a couple of nuances to Social Security. For example, if you are married for at least a year, or if you are formerly married for 10 years, you have the ability to collect half of your spouse's or ex-spouse's benefit if it is higher than your own. It's important to remember here, though, that you can only take one or the other. You can't start one and then switch to your own, or vice versa. Once you begin one, you have to stick with that one. So we want to make sure to be careful here because we want to maximize your Social Security benefit. We want to take the higher of the two. So that is actually a new rule. You used to be able to switch flip-flop between the two. So again, it's something that we can talk about in a little more detail one-on-one if needed, or if there are questions. Couple other pieces is that you can, if there's disabled children or if you have kids under 18, you can be eligible, but those are very specific situations to be eligible for Social Security. Next slide, please.
Earned income is something that plays a role in this, especially before full retirement age. If you're taking Social Security before then, your income that you earn through a job can play a major factor in this. So the technical term is your retirement earning test exempt amount. And I know that's way too long. Basically, it says if you are working and collecting Social Security, if you make over $23,400 is the exempt amount that you actually start to lose part of your benefit prior to 67 if you're collecting and working. Now, the reduction is it's $1 for every $2 of benefit. And it actually comes back to you after 67 on a prorated basis throughout the years. But it's something we want to avoid. One of the nuances they actually changed this year is the year that you turn 67 or full retirement age. Instead of that exempt amount being 23,400, it actually gets bumped up to 62,160. So they changed just that final year. The other factor of this, and I can always get into more detail on it, is in and of itself, Social Security is not taxed. If that was your only income and you're living on Social Security alone, as a benefit, it's not taxable. But as you show more income, and this is beyond just earned income, it becomes up to 85% taxable. So you can see how it's a moving target for everyone. You can go to the next slide, Haley. This is just the definition of what earned income is for any of you out there that are self-employed. That does still count, as well as bonuses, commissions, fees, anything that would be normal income looked at through the eyes of the IRS. That is considered earned income. You can see on the bottom here, what is not earned income is pensions, retirement, pay, workers' comp, unemployment. If you win on Jeopardy, it doesn't penalize your Social Security, investment income, and things like that as well. So next slide is a graph here, and I don't want you to read too far into the numbers, but I think the gist of it will make sense. On the left-hand side here, it shows if you had $12,000 of Social Security income and $10,000 of earnings, you would receive both of them. And then on the far right-hand side, if you had $30,000 of earnings, you would actually lose a portion of your Social Security. So 30,000 of earnings and 5,460 in this scenario of Social Security benefit. So just graphically to show if you're taking Social Security and planning to work, this is a great example as to why we don't want to take more than expected. Next.
And so this is a pie chart of sources of retirement income. You know, our goal as financial planners and helping our clients is that Social Security is a piece of the pie, but it is one of the most important. So it can help determine when you're going to retire, when you're going to take it, you know, what's your monthly expenses. But as you work, you save into different buckets. Social Security is one of them. There's going to be, you know, employer plans through your work, that stuff. But this is where Justin and I and Prosperwell, we help clients kind of traverse where is their money coming from, why, where are we taking from, and how Social Security plays into that. You can go to the next slide. So 4 common questions would be, will Social Security be there when you need it? The short answer is yes. We don't have a crystal ball, but you know, there are some changes that might come. Currently, benefits are going to be paid up to 100% of benefits through 2033. We expect there to be some changes, but we don't know exactly what that is yet. Those are things we could take questions on or connect on an individual level. As we mentioned, if you're divorced, can you receive social retirement benefits from your spouse's earning records? Yes. If you delay receiving Social Security benefits, should you still sign up for Medicare at 65? Short answer is yes, but Blake's going to talk about that in just a second. And will a retirement pension affect your Social Security benefit? So if you are a government employee, a firefighter, or a police officer, yes, that will affect your Social Security benefit. Other pensions, for the most part, no. They're situational, but for the most part, no. Next slide, Haley.
And I'm sure there will be some questions, or we'll cover some of the current environment, I'll say, of concerns that we've been hearing a lot of lately too. The only piece I wanted to add in here on sources of income and the pie chart that Connor just showed, there's a lot of buzzwords out there that we're hearing a lot right now too. And when you retire and start to look at working income versus Social Security and savings, retirement accounts, etc., that's when things like a Roth conversion, non-retirements can play a huge factor. We want to make sure estate planning is in line with where you want it to. You're not taking on too much risk. You may have heard of a backdoor IRA. There's actually something called a mega backdoor Roth now. These are all good planning tools for certain very specific situations that we love to go into the details on, but we don't have enough time today. So just something to keep an ear out for some of these terms, because there is a time and a place for them, and we just want to make sure everyone's using them at the right time. With that, I'll turn it over to Blake here to talk about Medicare, and we will answer more questions too for us and Blake after.
All right. Thanks, Justin. Can you guys hear me? We good? Okay. So real quick, just to say who I am. So you're wondering, why am I taking, information on Medicare from this guy? My name is Blake Beaudry. I have an agency in Albertville. It's Beaudry Hometown Insurance. And I bought that from my parents. So we've been in the Medicare business for about 30 plus years. And now I'm running it. So it's been in the family for a long time. We really enjoy it and enjoy helping people out. So, but on that, I work with Justin and Connor. They're my financial advisors. They do a great job for me. So I just told them, if you guys ever need help, reach out and I'd be happy to be a resource. So that's a little bit about me. But they just asked to give me some just quick 5 minutes about Medicare. And if you guys have any questions, at the end, you can ask questions, or reach out with me, or reach out to me anytime as well. Be happy to help. So the things I just wanted to cover that a lot of people are asking is, one, if you're turning 65, do you have to go on Medicare? And that answer is, it really depends. So the reason why we like to meet with people ahead of time before then is so they know kind of what to expect. It's a lot more common today that people are working past 65 and in turn are probably covered under a group plan. So if that's the case, a lot of times you don't have to enroll in part or in your Medicare. Now, why would you not want to do that? Because there's two main parts to Medicare. You've probably most heard is Part A and Part B. And kind of like Connor talked about before on the Social Security, is the Part A, that's free for most people that have worked 40 quarters or 10 years. So to most people, the Part A's, there's no cost to that. The cost comes on the Part B premium, which for most people is about $185 a month. And if you're taking, like Connor and Justin had said, if you take your Social Security before 65, they're automatically going to enroll you in Part B when you're the month of your 65th birthday. So that's why it's important to know when you're going to draw Social Security, and also what benefits, if you're going to continue to work past 65, you're going to need to know if you're going to stay on your group medical plan, because that'll save you $185. Now, the other thing too is, let's say you're going to work past 85 and you're not going to draw Social Security, Part B will not automatically start. So if for any reason you don't get group benefits, or you just want to go on Medicare, you would have to apply for your Part B premium, or your Part B to start. So just know that every situation is different. So a lot of times you might be talking to a friend and they might say something scary like, well, make sure you enroll or you could get a penalty. And there are penalties involved, and we can get into that. But the biggest thing to know is everybody's unique. So your situation might be different than your friend down the street that's telling you, you have to enroll by 65. That might not be the case for you. So just keep that in mind. Um, but the other thing too is a lot of people don't even know when Medicare they're eligible. Um, for most people, it's the first of the month that they turn 65. So, for example, my birthday is June 18th. If I was turning 65 this coming June, it would actually start June 1st. So just know that for everybody. The only caveat to that is if for any of you that have a birthday that falls on the first of the month, you actually are eligible the month prior. So don't ask me where that ever came to be, but it is what it is. So, but you have the 3 months to enroll in a Medicare plan. You have the 3 months before your 65th birthday, the month of, and 3 months after. Now, obviously, if you really need it to start on the month you turn 65, you're going to want to apply those 3 months prior. But again, I'm seeing now most people are working past 65 and will have group plan and might not need to enroll in Medicare. But just know if you're drawing Social Security, like Connor had talked about, and you're working and getting group benefits, you're going to have to tell Social Security, or I should say Medicare, that you don't need Part B. Otherwise, it's going to start coming out of your Social Security check, which you don't want if you don't need that. So those are the big things that I just had. Now, the other thing I just want to touch on too is there is just basic Medicare, and you can keep that and just have Part A and Part B. The one thing I always tell people is when you're just meet with a financial, not advisor, I should say, but like a health professional, health insurance professional. The reason why is because when I'm meeting with clients, a lot of them, I can tell they're stressed because there's so many letters that are, making them all nervous. What about Part D? What about Part C? What about, and really it overwhelms people. Um, so just sitting down and having the conversation about what kind of coverage you need, if you're going to have group coverage, that'll ease a lot of your worries and concerns, instead of being so worried about hearing from all the people about the different parts. It can really be stressful. So that would be my advice too, is just talk to an agent and tell them what's your specific situation so they can walk you through that, and be a good resource for you. So, with that, I guess just on that is, yes, you can have just basic Medicare. You don't need anything to go with it. But the easiest way I guess I can explain it is if you just take your basic Medicare and don't get, I'll use this term kind of loosely, but a supplement to go with your basic Medicare, essentially you can assume that your medical expenses will be covered at 80%. So if you go in and you have a $100,000 hospital stay, Medicare will pay roughly 80,000 of it, and now you can get a bill for 20,000. So if you want to avoid that, that's where you can get a plan that goes along with Medicare, and that's where you talk to an agent about that. So that was just real high level stuff. If you guys have other questions, there's prescription coverage. I can talk about penalties, where you can incur a penalty or reasons why you would incur a penalty. I'd be happy to help on that. But again, we just want to give high level information about how to enroll, why you need to enroll, or if you can delay it altogether and go from there. So sound good? I'll let Justin and Connor take it from there unless there's questions.
Perfect.
Yeah, and Blake, you can back me on this too. One of the most common questions we've been getting as of late is the current administration going to take away Medicare and Social Security? Nicole, Connor, and I actually just came back from Florida, and they reiterated there was political analysts, economists, everybody tied into Wall Street and the market, and all of them said at this point, no, we do not expect anything to change with Social Security or Medicare throughout the rest of this term. So the question always becomes, if you've seen a statement from Social Security, they say on the statement now, it actually says that expect a reduced benefit as of 2033. Where this is coming from is there's a pool of money that is Social Security, and the expectation is that pool of money will run out in 2033. So we expect something to change between now and then. The best way we heard it worded was no one's gonna get elected off saying that they're gonna reduce Social Security. So no one's gonna be changing it until they're the person saving it. On the statement as well, it should iterate something about 75 to 80% of Social Security. There'd be a reduction as of 2033. The way that it sits currently, where that percentage comes from is 75 to 80% of Social Security benefits are actually paid from the prior year's taxes. So every year, Social Security is funded 75 to 80% of what was paid through Social Security taxes. So when that pool of money runs away, we don't think Social Security in and of itself is going to disappear. There has to be at some point some reduction or change or refunding, but no one knows what that'll look like yet. And quite honestly, we don't think a politician will do anything about it until, like I said, they're the one saving the program, not the one reducing it. So.
And just to add a little bit, there are a couple things that they could do that we think are not necessarily easy, but would be things that the administration can make changes to keep it as is too. So where we don't know exactly how that's going to look, it's likely at some point, like Justin said, somebody will save it instead of being the person to come up on the platform that they're going to change Social Security.
Otherwise, we'll stay on for a few minutes here. I don't see any other questions, but we're happy to help answer anything or stay on here for a few moments too. There is, Haley just pulled up the PowerPoint again, and there is a QR code if you want to scan this to set up a meeting or talk more one-on-one about any of this information too. Otherwise, Blake, did you have anything else you wanted to add?
No, I just, again, if anyone ever has a question, you can always reach out to me or get in contact with Justin and Connor, and they can reach out to me too with any questions. I'm happy to help. But I think the biggest thing when I'm meeting with a lot of clients or prospects is just, I can tell there's a lot of nervousness, you know, uneasiness, I could say, about the whole process about Medicare, just because you hear a lot from friends or whatnot, and nobody really teaches you how to get involved in Medicare. I mean, everyone knows about Medicare, but how does that process work? So, happy to help, happy to answer any questions. And yeah, like I said, everyone's different, so don't feel bad to ask questions because everyone's kind of going through it together and learning on the fly. So.
Definitely.
Thanks, Blake.
Yeah.
We're here if anybody has questions. Feel free, we'll wait for a few minutes. But thanks for your time.
Thanks for your time, everyone. And as a reminder, you can either put in your questions in the Q&A or feel free to raise your hand feature and I can unmute you. Perfect. I don't think anyone has any questions, so that must mean we did perfectly. Thank you everyone for joining our Social Security webinar. Again, if you have any questions, Justin and Connor's contact information or emails are on the screen right now. Feel free to shoot them an email. Our phone number is also listed as well.